Welcome back to Stocklabs for another market recap. We're into September now. It's Labor Day weekend, so happy Labor Day for everybody. Hope you're enjoying some extra time off, barbecues, whatever you're doing to sort of wind down the summer months here. As for markets, was not a good week. We were looking for some continuation on the downside from the prior week into this most recent one, and I mean that's basically what happened. We sort of slid down into August month end, then chopped around a little bit with the start of September, and then ultimately finished kind of near the lows of the week by Friday. As far as the index performance, IWM was the big loser, down 4.8%. Q's not far behind, down 4.2%. S&P 3.4%, and the Dow down 3%. So there wasn't any real sort of fight being put up by the indices this most recent week. Bonds got hit again, down 3%. Actually, all risk across the board was bad. I mean, crude was down, credit was down, everything was down. So kind of like broad selling across, everything. As far as the leadership stocks go, those did not fare like any better. They kind of just went with the market, down 4.7% altogether. Big loser, NVIDIA, down 16%. And the rest, Tesla down 6.5%, Apple down 5%. This is kind of a big down week for Apple. Microsoft 4.7%, basically in line, and the rest, slightly better than the Nasdaq and S&P, but overall, pretty bad week for them as well. And breadth-wise, we were struggling. So basic materials got hit, consumer got hit, tech got hit. You can see across the board, it's just like selling, like whole hog. Just portfolios are getting rid of risk assets this week. So whether that was kind of just end of summer stuff, or if it's kind of the resumption of the overall bear trend that we've been in for more or less the entire year, we'll see. The upside subsectors, there were none. I mean, these couple ones are fractionally higher, but nothing really to talk about. And then on the downside, what led? A lot of the material stocks. You see some semiconductors on here, some software stocks or whatever. So it's pretty broad, but skews towards the materials and the and some tech stuff. So yeah, you see a couple different semiconductor subsectors are on here to the downside. So bad breadth from a sector perspective. If we sort of evaluate it from a market cap perspective, then let's see if anything skews one way or another. 1 to 5 billion, down 4.7%. That's kind of in line with the small caps. Minus 3.8% for 5 to 10 billion. 10 to 50 billion, down 3.6%. 50 to 100 billion, down 2.8%. So slightly better than the S&P. And then 100 billion plus TerraCaps, down 3.5%, kind of in line with the major indices. S&P was down basically the same thing. Qs were down a little worse, but yeah. So bad breadth from sector perspective, bad breadth, across market caps as well. There's not really anything to sort of hang your hat on if you're a bull. And the intelligence for the coming week, now it will be a short week. Markets closed on Monday, but we'll get started back on it on Tuesday. Okay, and there's some, there's a decent number of things on here, but nothing, not like a major uh, kind of component of the market. I mean, we have big oil on here. We have more energy stuff, NFTs, whatever, and a couple mid cap ones. Okay, more energy, oil services. Yeah, same thing. Crude. So it's like heavily skewed to basically the energy trade, and that's about it. I mean, you see this one fintech ETF is supposedly going to bounce a little bit, but overall, you're looking at mainly energy as potentially being the winner for the coming week. And if we check out downside, clean energy downside. Let's just reverse this worst to best. Okay, so worst. Okay, energy inverse energy. Okay, gold miners. More bear energy ETFs. Okay, Dow Internet Bull is bearish, so it's kind of be bearish for the Nasdaq. Okay, short Dow is bearish, so Dow will be bullish. So maybe we're looking at something. Okay, but retail's bearish. Yeah, it's very choppy on this side of the evaluation. Okay, home builders negative, blockchain negative. Yeah, it's kind of hard to draw any conclusion from this side of it, but you'd probably be for rally stuff. I don't think you're going to see it from the internet stocks and NASDAQ type components, but if you are going to see something, maybe the energy and materials trade uh, would be a little higher odds. Again, we are getting very close to oversold for Stocklabs. I mean, did say last, this was where we were on. This is where we were on the Friday before, and we slid quite a bit, but you can see the oscillator didn't change very much throughout the week. So we're not quite. I think the Nasdaq was down something like, I don't know, 500-600 handles for the week, but this oscillator kind of hung around the same levels that it was. So I did say last week that just because you're really close to the line doesn't mean that price wise the market is very close to a low. It could still be, quite a ways off. So we'll see. I'd be looking for more. I'd be looking for more downside, at least to start the week. Ultimately, I think this week there might be some sort of low. Before the end of the week, we should put in some sort of low and start maybe retracing back higher or working our way up, kind of in anticipation of the next Fed meeting that will be coming, I think, 2 weeks from now. So if you figure, okay, we've got 4 days this week, another 5 days the next week, and then what does that bring us to? Yeah, we'll have about a week and a half until the next Fed meeting by the end of the week. So, yeah, I'd be looking for some sort of low to get put in this week at some point, and then start moving back higher, especially if we are able to lock in an oversold signal one of these days, maybe Monday or Tuesday. That would go a long way for setting up a little more constructive of a rally. But all of that is just, we have to see how it plays out and go from there. September, seasonality wise, is generally not great. On average down 1%, but I mean, so far a lot of these seasonalities have not, this has been an odd year. Well, I shouldn't say it's an odd year. I mean, it's just because stocks are down doesn't make, well, that does sort of make it an odd year in itself, but the seasonality trends have not stuck this week, although this one kind of lines up with how the market has behaved most of the year. So we'll see. But September, like I had mentioned before, and Fly has mentioned it before, September has some really big down months. Sort of like some famous down months. So something to keep an eye on. But yeah, if we're able to get one of these oversold signals, I'd kind of feel better about where we're at. I mean, the last week kind of felt a little bit like it was starting to the market was starting to wash out again a little more. But I'd still be looking for some more continuation, and then see if we can put in a stronger low than what we've had recently. So, yeah, that's all from me. Hope you guys are enjoying the weekend, taking some time off. You don't have to look at markets every single day of the week, but yeah, if you tune into this just to get a little bit of a recap, then thanks for doing that. And we'll be back at it on Tuesday, and talk to you next time.